Salakia, this is part two of this lesson of part one I did. I had to close it because my brother had called me, was checking on his mail, see if he had some mail. But yeah, back with part two of this lesson on regards to the Dow Jones. The markets has crashed once again after it has its uh, good rally gains of Monday and Tuesday and Wednesday and Thursday, I believe. Right, Monday, Tuesday, and Thursday's gain of the stock. And as it fell once again, after I believe the jobs report came out and the increase of the interest rates from the Federal Reserve. And continuing on with the reading, it says the Dow Jones Industrial Average fell 630 points, and or 2%, which is to 29,296.79, and the S&P 500 lost 2.8 points to 3,639 to 66. The Nasdaq Composite slid 3.8% to 10,652.41 points, which is lesser than 1% above its lower of the year. Friday's loss trims the gain for what started out as a big comeback week for the stocks. The major average still ended a week higher but gave back most of the gains from the rally that kicked off. The Dow Jones rose 2% from the week, while the S&P 500 added 1.5%, and the Nasdaq eked out 0.7% gain. And this is a statistic right here of the economy of the United States. The U.S. economy has added 263,000 jobs in September, slightly below a Dow Jones estimate of 275,000. The government says Friday, however, the unemployment rate came in at 3.5, down from the 3.7 in the previous month, and a sign that jobs picture continues to strengthen, even as the Federal Reserve tries to slow the economy with rate hikes to stem the inflation. Right, because they continue to battle to ease the inflation. Because I believe the inflation is still consistently going up at a steady pace as well too, along with the consumer spending, and the oil prices had a little increase. I say for about the past 2 weeks as well too. So, but continuing on with the reading, it says while the data was about as expected, the drop in the unemployment rate seemingly what the markets are obsessed with, because what it means for the Federal Reserve of Wall Street, said Bleaky Financial Chief Investment Officials Peter Boockvar. When combined with the lower level of initial jobless claims, and the pace of firing remains muted, and his course get the Feds all fired up about continuing with its aggression of rate hikes. It says the following unemployment rate sparks a jump in rates and turning weight on stocks. The 2-year Treasury yield rose 6 basis points to 4.316%, and 1 base point equals to 0.01%. And it says advanced micro device stock stumbles at a chip maker warned its third quarter revenue would be lower than anticipated. The Levi's Trust shares slipped following a cut to the company's guidance. And it says the conclusions many will have spoken, which have reached, is that not only will the Federal Reserve not help markets, but with their dogged pursuit of price stability to keep going until breaks in the capital markets, said Christopher Harvey, a equity analyst at Wells Fargo Security. What appears to be their increasingly singular focus, price will likely to catalyze the dislocation. So yeah, as had the job markets, the unemployment rate, and went down from 3.5 from last month, because last month it was 3.7, now it's down to 3.5. And I believe the United States added 265,000 jobs, and it's lower than expected of the 275,000 according to the Wall Street statistics shows. And I believe after that job reports came out, with the additioning of adding jobs, and the unemployment rate went down as well too. So, I've been mentioning this before of these sit down lessons that I did in regarding doing videos regarding the stock markets and stuff like that. Because sometimes the Wall Street it feed off the reactions of the economic statistics, the job report statistics, the inflation to anything that's regarding to economics, or anything that's like job related or something like that. It can be gas productions, oil consumer spending, or jobs reports, businesses, companies, and CEOs, or the Federal Reserve, or business companies making announcements. So the stock markets feed off of that. And once they get that reaction, if the stocks bonds gonna be able to raise or is gonna decrease. And in this situation, the stocks had a decrease today. I believe negative 632 points, and the Nasdaq dropped down to below 3% as well too, along with the S&P 500. So hey, still showing you more and more continuing signs of modern day Babylon is fall. Especially on the economic scale, because you still have the Federal Reserve still tackling to decrease the inflations, even if it slows down the economy, because you still got expert that's business or economic base related, that's experts in these situations, and they believe it's still gonna be getting close to a potential recession. You know, so yeah, you're gonna still see more continuing signs of the stocks crash. Sometimes it might, because it's a balanced scale between, and it all depends on what the stock markets, of what their reaction goes to that. If it's a good reaction, it has a good reaction. If it's a negative reaction, it might have a negative reaction. But sometimes it's a seesaw balance, because it all depends on what the stocks, what they react to, what's going on in the news, especially economically or globally. You know, if it's good or bad, that all depends on if it's entering the positive range or the negative range, or potential stocks crash. So it goes by that sometimes as well too. But you still gonna have continue, even if the U.S. still added decent, solid amount of jobs and decreasing of the employment rate, but you're still gonna have consumer spending gonna continue to increase. the inflation is going to continue to increase, even if the Federal Reserve constantly, consistently, nonstop, trying to ease the inflation, but it's still going to continue to increase. With the oil prices and the gas prices, that's going to continue to bounce back up as well too. Especially we're entering fall and winter as well too, because it's definitely going to affect countries in Europe, globally, and the United States as well too, because you're going to still have consumer spending increase. Because I believe not too long ago the consumer spending was like 8.5%, but I would be suspected the consumer spending gonna increase more and more, along with the inflation and along with the gas prices and oil production as well too. So that goes to show you the continuing falling more signs of modern day Babylon. Even if they added more jobs, decreased the unemployment rate, but you still got to look at the Federal Reserve still continue to increase federal tax hikes, taxes on everything. Everything is going to continue to goes up. Everything, even the gas prices, consumer spending, and the inflation as well too. So that's still showing you more progressing of continuing signs of modern day Babylon is still going to continue to fall economically. So with that, I hope this sit down lesson was edifying. As far as the stocks and marks, the stocks and bonds on Wall Street has crashed once again after it had its little 3-day gain from Monday, Tuesday, and Thursday. And I believe Wednesday and Friday they had not so much good gains. So those 3-day gains of this week, of those Wednesday and Fridays losses, they kind of lost those winning streaks as the Dow Jones, S&P 500, and the Nasdaq crashed once again. So this is going to be a continual trend with the up and down balance scale of the with the Wall Street dealing with the Wall Street, or what's its reaction of globally, of economically as well too, or what the Federal Reserve, what if they're going to continue to increase the federal tax hike to continue to ease the inflation rates as well too. So the markets react to what's going on economically, in those areas as I just named. So with that, as I mentioned before, hope this sit-down lesson of part 1 and part 2 was edifying through the spirit, power, grace, and mercy of Yahweh Yahushua. And first and foremost, like to give all praises and glory and honor to Yahweh, Bahashem, Yahweh Shai, Bahashem, Wakakadash. Double honors to the elders and apostles of Great Millstone, preaching the word truthfully and sincerely. Shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely. And shalom to the Akim that be like unto the speckled bird, preaching the word truthfully and sincerely. And until next time, I will say shalom and a ball.